Ladies and gentlemen, thank you very much and good afternoon. From my side also, sorry for the delay. We are honored to have you here in Frankfurt Airport's presentation jointly with Stat Times at the Shippers Afternoon here in Mumbai. It is indeed my pleasure and it's a privilege to be here. As Frankfurt Airport, we work with India since many, many years. Myself, in my background, I was the general manager of Delta Airlines in Europe for almost 20 years, and so with the acquisition of Pan American World Airways in 1991, this is when my regular trips to India started, so I'm here like 3-4 times a year since then. So I'm quite familiar and I feel very warm welcome always from the people I have to work with and deal with here, so this is kind of my second home. As you are aware, the Air Cargo India show and event is the largest of its kind for the Indian cargo industry, and looking at the recent years when that show grew and grew every second year, I've participated in that show since almost the beginning. It has developed to a forum where the cargo industry is coming together, is meeting, and the airlines and the forwarders and the airports and many other parts of the supply chain are talking together, are sitting here in various locations, and we are having very fruitful discussions about everything that goes with the supply chain, and especially with the effectiveness of air cargo to the producing manufacturing industry around the world. So when we were talking recently on what do we need to do, the Stat Times team and our teams, we were sitting together and we were looking at are we talking to everybody in the supply chain? Are we talking to every little piece? Are we missing out on anyone? And we came up with the opinion that we are talking to almost everybody but the shipper. So this is how the idea came to put this in place and to get it started with today's afternoon. So I have been on a roadshow to parts of India recently, and I've listened jointly with the Stat Times team to some of your concerns, some of your issues you have, some of your challenges that you are faced with as the shippers, both for the export and the import industry. And we thought we assemble the right people here, officials on the governmental side, customs, airport, government, as much as we possibly can. So we're extremely honored for those ladies and gentlemen that are here to join us this afternoon. I want to keep it short, and I would now turn it back over to get the first group here up on stage, the first speakers. Thank you.
Round of applause for Mr. Roland Bain, please. Let's have a round of applause. Ladies and gentlemen, once again, it gives us immense pleasure on behalf of FIO and Frankfurt Airport to have all of you here. We'd like to welcome at first a few people, of course, seated amongst us now that you've joined us, and we are very, very immensely pleased to have you amongst us. Firstly, of course, we do have a note from Mr. Khalid Khan, the regional chairman of FIO, who's extended his apology for not being able to attend due to urgent meetings by the Ministry of Commerce. He, however, extends his best wishes for all the proceedings here. I would now like to acknowledge the presence of our various dignitaries amongst us, and we could give them a round of applause as they're seated amongst us right now. Let's have a round of applause for Mr. M. Thakur, the Joint Director General Foreign Trade, Government of India. For Mr. Anil Kumar Gupta, the Commissioner of Customs, Government of India. For Mr. Satya Prasad Sahu, the Commissioner, Information Technology, Central Board of Excise and Customs, Ministry of Finance. For Dr. Sudhanshu, the Deputy General Manager, Agricultural and Processed Food Products Development. Let's have a round of applause, please. For Mrs. Padmavati Rajashekaran, the General Manager, Export Credit Guarantee Corporation, ECGC. Let's have a round of applause, please. For Mr. Krishna V. Maskar, the Vice President and Secretary, Foreign Exchange Dealers Association of India. Let's have a round of applause, please. For Mr. Darshu Ziara, the Senior Vice President, Frankfurt Airport. Let's have a round of applause, please. For Mr. Pramod Sant, the Vice President, Siemens, Head of Import and Export Control, Customs, South Asia Cluster. Let's have a round of applause, please. For Mr. Jayan T, the Executive Manager, Worldwide Logistics India, John Deere. Let's have a round of applause, please. For Mr. Uday Chennai, the Chairman, BBC Group. Let's have a round of applause, please. For Mr. Ajit Shah, the Senior Advisor. Let's have a round of applause, please. And finally, for Mr. Bernhard Steinrücker, the Director General, Indo-German Chamber of Commerce. Let's have a round of applause, please. Thank you so very much to all our dignitaries for joining us. Ladies and gentlemen, in a short while from now, you will see them up on the dais. But at this point of time now, it gives me pleasure to invite up on stage for the keynote address, Mr. Mithileshwar Thakur, the Joint Director General of Foreign Trade. Let's have a round of applause as I invite him up on stage. Sir, if you could come and proceed.
Friends, dignitaries, ladies and gentlemen. Well, we have assembled here today to discuss trade facilitation, but we are here at a time when the goings are not all that good. We are not in a very comfortable position. The picture is not all that rosy. And when I say this, I am probably putting it very mildly. It's an understatement. The fact is that we are in a precarious position. Indian exports have been constantly and consistently down for more than a year or so. And this is something unprecedented in recent memory. The only silver lining that I can see is that the decline and fall, the free fall in exports, is not on account of the usual problems that we have, or infrastructural inefficiencies, or the rising transaction cost, or our high cost of capital, delays, paperwork, all that the problems that we have been living with for all these years. The decline and fall in exports this time around is on account of the contraction in global demand, and perhaps to an extent the devaluation of Chinese currency. So the contraction in global demand, this is something that we cannot anything do about. How to go about it. So in these times, in these difficult times, all that we can do is to take the best available option that we can do, and that option is that we must try to revive and reactivate the mechanism of trade facilitation. Friends, the renowned economist and Vice Chairman the TIO, Professor Pani Garia, is on record having said that India's GDP growth rate is primarily, on the impressive GDP growth rate that we had in last decade, is primarily on account of the enormous growth in exports. Not only India, we all know that Asian tigers, South Korea, Taiwan, and then China, they all have, the GDP growth rate of all these economies have piggybacked on growth in exports. So really, whether we believe it or not, India also has been in a kind of export-less growth scenario. And today, any economy worth its name cannot afford to ignore the element of foreign trade. We in India, our foreign trade accounts, I think for almost it accounts for more than 50% of our GDP. So no economy worth its name can afford to ignore international trade. And if any economy does, it does at its own peril. So the friends, and you know that all developed nations and the trade bodies, they believe that the only way trade can grow is to have an unhindered flow of goods and services across the borders. And that is what trade facilitation means. What is trade facilitation? Trade facilitation is about simplifying procedure. Trade facilitation is about streamlining procedure. Trade facilitation is about harmonizing procedure. It is about reducing transition cost and time. And in Indian context, in any other country, it is first moving to a paperless regime where we believe in digitization and there is less of paperwork. There has to be some kind of transparency and accountability in the system. Friends, without taking much of your time, I would like to say that the pattern of the global trade has undergone a fundamental change. Today, it is not as much as trading between firms, it is between supply chains. Any country which wants to go on a higher trajectory of export growth will have to be part of global value chain. And when we talk of global value chain, what we mean is that, the intermediates or the components from various countries, they get combined into production network. When we talk about global value chain, what we mean is, we mean internationalization of manufacturing process. There are more than one country at different stage participates in the manufacturing of a product. And this model requires, it requires a world-class infrastructure. It requires a very smart and efficient clearance at customs. It requires just-in-time production and just-in-time delivery. So basically, you cannot be a part of the global value chain unless you are very efficient and your systems are very dynamic. So in that context, the trade facilitation assumes more significance than ever before. Now in India, there are systems in place. When I talk about Department of Commerce and the Ministry of Commerce and Industry, we have tried to move towards a paperless regime. We have, we believe in efficient delivery of systems through massive exchange with community partners, through online filing of applications. We are on 24/7, we are connected to our DGFT central server. So these systems are in place. We have created a very unique system of EDRC, where any exporter earning foreign exchange, they do not have to approach foreign banks at all for EDRC system. All these remittances get uploaded to DGFT server directly, and there are 90 banks on board. So 1.5 crores EDRC have been uploaded to DGFT server, and this data we have shared with 13 state governments and enforcement directorate. And state governments share this data because they want to do VAT refund and things like that. Similarly, customs also have trade facilitation measures in place. They have your risk management system in import and exports. They have now 24/7 clearance, accredited client program, authorized economic operator program, on-site post-clearance audit, so on and so forth. So systems are in place. Government is keen, and government has been consistently doing things. It's a different matter. The trade industry will not be, your expectation may be a little higher, and you may be a little falling short on your expectation. So there's always a kind of, gap between promise and performance. But then the government is doing, and more importantly, is keen on doing things. But friends, I would like to just give, my perspective that for me, individually, trade facilitation does not necessarily mean only these systems in place. Because there can already be systems in place, and the ground reality could be a little different. So what is more important? For me, trade facilitation does not necessarily mean system. It means a change in mindset. It means a change in attitude. Trade facilitation for me means that you have to revive your helplines. You have to approach the problem of trade industry with some kind of empathy. When you deal with the problem of trade industry, probably you have to try to put into the shoes of the trade industry and do things what you can do best. Obviously, within the framework, within laws. But then suppose there is a minor infringement. The minor infringement has to be treated as a minor infringement. It should not be treated as a violation or a crime. So my only point is that trade facilitation besides systems is a concept of an individual, a mindset, and we, particularly a country like us, we need to have to undergo that kind of a change more than any other country. So our systems need to change, our mindset needs to change, our approach needs to change, and that is equally true of trade industry as well. Trade facilitation actually is based on trust-based model, and trust is never one-sided. So trade also has to be very responsible, and government has to be responsive and transparent and accountable. There is no denying that. I believe when we are able to accomplish this task, the trade facilitation will be there. And recently, as you know, we have been able to, India has ratified TFA, and the WTO projection is that the signing of trade facilitation agreement, the global mercantile exports would grow almost $1 billion annually. And the estimate of the Department of Commerce was that incomplete implementation of trade facilitation measures cost Indian government almost $6 billion every year. So this is something which we can minimize, we can do away with, and we can look for a better and better future. Thank you.
Thank you very much, sir, for that keynote address and setting the tone and the context for all the discussions to follow. Ladies and gentlemen, we now have the Export Credit Guarantee Corporation Policies presentation, for which I would now like to invite up to this dais the General Manager, NMD, CSR, Legal, RTI, IRDA, Mrs. Padmavati Rajasekhar. Let's give her a round of applause and welcome her, please.
A very good afternoon to all of you. It's indeed my pleasure to be amidst all of you. Thanks to FIO for inviting ECGC to be a part of this grand program. The program is happening at Grand Hyatt in a very grand manner. So, yeah, okay. Well, the time available is very short, though I had a presentation, PowerPoint presentation, but I don't intend doing that. I would just like to speak a few things very briefly. Firstly, I must mention that with FIO, ECGC works very closely. We do a lot of programs, joint programs, along with FIO for the exporters. And another most interesting information is that the president of FIO, Mr. Rallan, is on the board of ECGC. So we constantly get feedback from FIO's members to see how best we can improve our services. So it's a continuous exercise which goes on. The DGFT spoke about trade facilitation, which is the focus of the government. The ease of doing business is what the Prime Minister has also been talking about. So we are all working towards achieving this objective of ensuring that the exporters, the businessmen are in a position to carry out their operations in a comfortable and easy manner. Also keeping the costs to the barest minimum. We have to see that our exporters are competitive. I'm sure majority of you here are aware of ECGC, but let me just mention a few important points. ECGC is into its Diamond Jubilee year. So we are stepping into the Diamond Jubilee year, the 60th year from July of this year. So you can well imagine how significantly we have been playing a role in export promotion. We work under the control of Ministry of Commerce, and our core business is credit insurance. Just to remind you of the incident which happened a few days back during the Make in India week, where I'm sure most of you would have seen it on the TVs and maybe in real situation also. The Maharashtra night stage which went up in blaze. I happened to be there. For the first time I witnessed something of this kind. The message I'm trying to give is the uncertainty. Despite all the safeguards, all the required compliances with the regulatory bodies, this incident happened which took everybody by shock. So uncertainty is something which is a part and parcel of any business, and therefore the need to protect your business interests by taking requisite insurance covers. I'm sure the first question that would have arisen in the minds of the people is, are they insured adequately? So they get indemnified. And fortunately, I think they had taken necessary insurance covers and they would be able to sustain their business. So ladies and gentlemen, ECGC has a range of products, credit insurance products for the exporters. When you deal in the international market, what is it that bothers you? The whole objective of exporting is to earn foreign exchange, which rightly, as DGFT mentioned, no country can survive without international trade. So, when you deal with the overseas buyer, you run a huge risk of non-payment. The country is equally important, the country of export. What are the prevailing rules in that country, the local laws, the political and economic situation that prevails in that country should all be well understood before an exporter ventures into a particular destination. So you have the buyer, you have the country, and equally important is the bank. If you have a bank which is opening a letter of credit, you also need to see the standing of that bank and the LC which is opened by that particular bank. So these three elements of risk which an exporter encounters are all taken care under our credit insurance covers. So we have a range of products, almost 13 different products to meet the individual requirements of exporters. Apart from this, we also do customization. So if these 13 products do not meet the requirement of an exporter, we are still willing to discuss and see what is the requirement of the exporter and customize a product. We will be able to make a product for the exporter. So this is one major business of ECGC, the policy business which we give to the exporters. In addition to this, it has been felt that there is a need for exporters and the businessmen to get adequate finance. If the business has to run smoothly, timely finance and adequate finance both are essential. To take care of this requirement, we provide the banks in India with a cover, credit insurance cover, whereby The cover of ECGC acts as a collateral security for the bank, and the banks are willing to lend against this ECGC's cover. In fact, 70% of ECGC's business comes from this, we call it ECIB segment, and about 30% of the business is from the policy business, which we give directly to the exporters. Now, apart from this credit insurance cover that we offer, we also provide a lot of information to the exporters. One, information about the overseas buyer. We obtained reports from several information selling agencies, which is analyzed, studied, and the exposure is underwritten on the overseas buyer. This gives a lot of comfort to the exporter. Even a new exporter who does not know who is the buyer sitting on the other side of the globe, through ECGC is able to get this information and carry on with his business. We also give the exporter information on the country. As I said, the country, the destination is equally important. Therefore, we continuously do analysis of the countries, where we have 237 countries grouped in the order of the risk perceived in those countries. This information is all available to you on our website. So before you venture into any country, you can take a look at that and see which are the safe countries to do business with and the risky countries where you may have to take certain safeguards. So you have information on the buyer, you have information on the country, and you also have a credit insurance cover which will indemnify you in the event of loss. So basically it is the non-payment risk. I'm making this point clear, and maybe I would conclude with that. So as a credit insurer, we cover the risk of non-payment. Generally, there is a misconception that ECGC would cover damage and pilferage of goods, but it's not so, because you have the general insurers to do this. So we are only concerned with the credit terms, the payment terms. Now, as far as the air freight goes, all our policies will provide cover, be it shipment by sea or be it shipment by air. There's no difference there, except in the documentation that would be required. Because in case of air freight, generally the goods are delivered directly to the buyer. The documents may go through the bank, where the risk of non-payment is very high, because the goods are already in the hands of the overseas buyer. But we do provide cover, and we recommend the exporters to take a limit on the buyer on DA terms, documents against acceptance, to protect themselves. So we are doing a lot of education programs. We are also doing awareness programs. The whole of last 2 years we did several programs along with Dun & Bradstreet, and on our own we have done. We also carry out a customer satisfaction survey every year, and to see what are the shortcomings and take action to improve upon them. So friends, I would only appeal to you to protect your business interests by taking adequate insurance cover from ECGC. We have 58 branches in various export centers, the head office being in Mumbai. So get in touch with any of our officers and they will guide you through. Thank you very much.
Thank you very much, ma'am, for that very informative address. Ladies and gentlemen, we now have Foreign Exchange Dealers Association presentation, and for which I'd invite the Vice President and Secretary, Foreign Exchange Dealers Association, Mr. Sri Krishna V. Maskar, to kindly come up on stage and take us through his presentation. Let's have a round of applause, please.
All the dignitaries and exporter friends, I am here to give some information about practical aspects of the business which we normally face through bankers. There is always a complaint against bankers that bankers are not that kind, and we are the body of that banker. So I will have to make a balance of both. Primarily, when we are in this export business, what credit angle Madam has told is very much evident. The risk related with the recovery is very much possible to be covered. But the major point which is normally missed out by the people, either in import or export, is about the exchange risk. People take for granted exchange rates. It was valid some years back when there was no movement at all. During the day, not a single paisa movement was there for rupee. That time it was okay. But still, I remember one case of one of my customers. The moment he put the application for pre-shipment credit, he was giving the application for forward booking also. His payments were fixed, money was getting recovered in time. So, in a very, very less volatile market, why he was booking was to get a benefit of premium. That was a prudent policy of that person somewhere in 1990s. In today's market, if you see the fluctuations are 1 to 2% fluctuation in exchange rate is very much normal. It may go up, it may go down. In that process, if you have the policy of risk insulation, that can make the business more viable. In addition to various facilities given to exporters, exchange rate booking, exchange forward booking, using the options and futures, these are also the available facilities in the exchange market to various customers under liberalized scenario. Presently, there are various facilities available for booking. Even on past performance basis, we can do the booking for exports. Whether the delivery is possible or not, that is something different. But that facility is not utilized for arbitrage by so many people. So sometimes they get, sometimes they may not get the benefit. But as a normal business people who are supposed to be getting the definite amount of their export realizations, there are two ways of looking at it. One, whatever price we quote, whatever billing we do, we are expecting rupees only. We are not concerned with dollar value or euro value. It is only a conversion factor to make the business more and more convenient to both the countries. But primarily what we receive in rupees is the only thing which is in mind of every exporter. So what we quote in the overall billing is the gain which party has got in his mind, along with the costs, the definite margins, and all which are expected to be recovered. So after that, the question of exchange rate comes. If the person is not booking at the time of shipment or after the shipment or at the time of submission of bill, that time there is a possibility of losing in the process, and he may not be able to recover the what value he has supposed to be received in his mind. So one alternative for that is to go for the booking, take the benefit of premium. Primarily premium is always ignored by the exporters community because they always focus on the spot value. Then they see that spot premiums, spot rate is always going up and down, so try to make the benefit. But unfortunately the experience shows that when exporters are supposed to book, importers rush for the booking and vice versa. So that is the major problem which all the people are facing, and exchange risk insulation is a very neglected area as far as my banking experience goes on. For that, one alternative is available. There is rupee billing in the or invoicing in rupees. That will definitely insulate what you want to support, what you are supposed to receive, and there won't be any exchange risk element involved in that. So we are completely doing away with the exchange rate fluctuations, and what we are expected to receive, that we will definitely receive. But our tendency is always dil mange more. We always want to have something more than what we have. In the process, we may get some time, but we may lose most of the times. One more thing which I would like to highlight here is keeping the funds in EFC. It is a facility, definitely good facility available because of convertibility issues on current account. It is a very nice facility of insulating from the conversion costs. But this particular EFC concept has been very lavishly utilized by the exporters. I am saying this with complete consciousness of what I am saying. Basically, when the money is kept in EFC, now there is a compulsion to convert that money into next month's last date. Beyond that, you cannot keep the funds in EFC. But previously, it was kept inordinately for 3 to 4 months duration. with the expectation that rupee will devalue. Just try to understand one concept. If the money is kept in EFC and the person is using the cascade facility with the banker, he is paying 13% interest on that. His export receivables are already in his account, but they are kept in foreign currency with anticipation that rupee will devalue someday. Is there any possibility of rupee devaluing by 13%? Definitely not. So that time it is better to convert the funds into rupees and keep it in your interest paying account. And whenever your import payment is there, we can take the benefit of exchange rate coming down in this favor. So when the rupee is strong or it is going to be strong, there is no point in keeping the money in EFC. And even if it is getting weakening, it is not weakening more than the rate which you are paying to the bankers. So this point we have to always keep in mind. If the payments are immediately within the next some days, then money can be kept in EFC to avoid from the conversion costs. Secondly, the ease of business has already entered our doors. E-commerce has been more and more emphasized, and for small value exporters, there are so many things which can be done online. Secondly, for any remittances, now RBI is coming out with some regulations related to online submission of some forms that can make the life convenient and comfortable for all the exporters. And in this overall process, the takeaway message from banking fraternity will be, bankers are there always to give the best offers, best services to the customers. More interestingly, the LC business we always feel as a secured business, because once the LC is issued, we feel that our payment is secured. But it is a double-edged weapon. When we say LC is a safer way to get the payment, it is safer way to refuse the payment as well. As an importer, what we do, we tell the bankers कुछ discrepancy निकालो, तो हम लोग payment hold कर सकते हैं. Same can be the tendency of exporter or importer in the overseas country. So my humble request to all of you is that whenever you receive any LC, please go through the LC very, very meticulously, because there may be some points which are not noticed at the time of receiving the LC, but they can be a major hindrance while receiving the payment. That can be a very simple conduit to refuse the payment. So scrutinize the LC correctly. If required, get the LC amended, suited to your requirements, because LC is not a trade related activity, it's a payment mechanism. So payment mechanism should not come in your way any point of time to get the money and go to the ECGC for recovery. That is not the way of doing it. So please scrutinize the documents correctly, and perfect documentation is the only key for success of LC mechanism. A single discrepancy can make the payment hold, and then the problems may start in the future. Whatever may be the status of customer which is dealing with you for years together, but over the years, the situation of customer may not remain same. He may be in problems, and that time he will use the LC as a mechanism to reduce the payment. So these are some very practical things which we normally face as a bankers. In spite of giving a lot of advices to the customers, they are not keen to go with that, and this is a forum which I find that I should share my views on this, because after working for nearly 30 years or 38 years in banking, these are some very important issues which we have been facing day and night with the exporters and importers. So please don't keep your exposures open, at least cover them partially, so that you can average out with the prices and you can get better returns on what you have exported to the country. In spite of all these things, the business is going to be on. There is no second opinion about that. All efforts are going to be giving support to exporters. Recently, that interest subvention scheme also has been introduced, and that is going to bring down the cost of funds, and it can make the Indian exporters more and more competitive in the business. Thank you very much.
Thank you very much, Mr. Maskar, for that enlightening presentation. Now, ladies and gentlemen, I take the opportunity, and it's my pleasure to invite up onto the dais for the authorized economic operator presentation, a senior consultant, Mr. Ajit Shah. Let's have a round of applause for him, please, as he steps up.
Good afternoon, friends. I had a buyer from Germany. He wanted to buy some cutlery items. I took him to a few manufacturers. At one place, he had selected the product, and when we were finalizing that order, he indicated that on the box he wanted a green dot. I was unaware at that point of time what the green dot means. And he had the sample
which he has given it to me, and insisted that the goods which I am going to send to him should have the packing which should have that green dot mark. When I asked him in detail about that green dot, he explained to me in detail, saying that if a German buyer, a consumer who goes to the departmental store, and there are two boxes, two packets, which are available over there containing same cutlery at the same price, but the one box will have the green dot, the another will not have it. The tendency of the German buyer is to purchase or buy that box which has got a green dot. It represents the environmental friendly symbol of that. Friends, various symbols have implications in the life, in the economics. What we are going to do today in the available time, we are going to talk about that symbol, that thing which is popularly known as an AEO. I'm too sure many of you must be aware about this. Since the time available with us is limited, I'll be running through the slides, skipping some of the slides. Basically, this is in 2005, WCO, World Congress Custom Organization has introduced this. The keywords are very, very important. Safe framework. Safety was the priority. If you study the entire AEO subject, you will find several places, the various procedures, various detail which is given. They are all zeroed down to the safety of this. Safety of the goods, security of the people who are working with that. And once the safety and the security is incorporated, it is injected in the system, in the documents, then as a reciprocation, what the customs will do to the AEO holder, to this recognized operator, that is the facilities. So various facilities will be offered by the customs of the country to the AEO operator, and this is what basically is the objective for this. Indian Customs also has incorporated, taken from the World Congress, this particular AEO program. Yes, this is the significance of this logo. Moment this logo becomes a part of your company, part of you, then you will be treated as a trusted operator, and that means a lot to the AEO holder. This is all those people who are in the international movement of the goods, they can become the AEO, but the requirement is that all the security standards, which are to some extent very high, you have to comply with that. That is very, very important. And if it is so, then the net result or the effect or the benefits to you is a simplified custom procedure. This is very, very important, because custom procedures in the different countries will have a different degree of strictness. Here in this case, the ease of doing a business and the reduced intervention, the number of the examination, number of the checking, requirement of the documents, all these will be reduced once you are the AEO part of it. Again, as I mentioned to you, it is a safety which is a more important. The next question comes, who can apply for the AEO status? These are the categories. Importer, if you remember the IBM, the one who got this AEO, they were the importer. Exporters, warehouse owners, custom house agent, what we call now custom broker, cargo forwarders, port operators, authorized couriers, stevedores. Who are not eligible for this is the three categories. Banks, insurance company, and the consultants are not covered by the AEO program. Again, two things. Security is a key word everywhere you will find about this AEO program, and the other side of your business counterpart, they will consider you as a reliable once you are the AEO partners. RMS is already there in India, in Indian Customs. AEO is a one step further to the RMS. It is a degree difference more particularly, and this is the key I wanted your attention. If you are an AEO status holders, then the simplified custom procedures. Those who have, in India, for a years together, custom procedure was always considered as a harassment, difficult, long, time-consuming paperwork. And the moment it is simplified, because you are the holder of an AEO, that will be one part of it. Various declarations are required. Say, for example, you have imported second-hand machinery, second-hand capital goods. Valuation is required by a chartered engineer. If you are an AEO, then self-declaration by you itself is good enough for you. And the faster custom clearance, there is a table which I have prepared that how much it works out. If you are having a few shipments, then perhaps it will not be beneficial to you. But if you have a volume, if you are doing it out, then saving every time, every day, that will bring efficiency and the benefit. This is the one what I have done it. For this, these are the chart. You can just take the last one. If the import is generally taking 5 days, then under the AEO part, it will be taking 2 days, and export if it's taking 3 days. This is just an example for comparison and easy understanding. Then it will be for 1 day. There are other benefits which are comparative chart. I have mentioned about it. So this is also, you can go through this. This is a small example. It is not the exhaustive list. There can be many more. It may differ from this part of it. Reduced bank guarantee, as we know, that whenever the bank guarantee is required for the government to protect the revenue in the individual cases, that is a point of time. The reduced bank guarantee also is available. Same thing for the exporters. CHA, these are the different segments. Again, AEO program is based on lot of documentation. Records are required to be maintained. You have to follow a certain system which is already predetermined, and you will be continuing with the AEO, and for that the objective and the subject for you is that you have to maintain the system, and it is a compliance which is the most important aspect of it. It is given to all the legal entity. These are the various detail what you require to provide. These are a little bit of a technical. There's a security plan, there's a process map, what we call it a flow chart, site plan. This is also required. The various details are there. This is the headquarter where this entire project of the AEO is been conducted. AEO is consisting of 2 things. One is the AEO team, that's a program team. And there's a program manager who is heading the entire team. This is a process. You have to make an application. They will come for the verification, validation. If there is anything which is a discrepancies, they will point it out, give you a time enough for you to rectify the same. And then once if it is work out everything, then the APC certificate or it will be allotted to you. This is what exactly is that. There's a time limit with everything. It works on calendar basis. The team will come, they will take a prior appointment for the visits. And the time limit for the AEO status is to give a 90 days time. Rejection, if it is not as per this standard in the requirement, obviously it will get rejected. Compliance is a very, very important thing. Again, safety, security, data, these are the things which are essentially required. This is the one company which is having Android containers, IBM, LG. These are the 3 companies which were starting, and now there are total 32 companies as per my information. They are already the holder of this. These are the few names. Most of them are custom brokers. I wish your name is there next time. Thank you.
Thank you very much, sir. Once again, that's Mr. Ajit Shah, the Senior Consultant on the Authorized Economic Operator presentation. Ladies and gentlemen, once again, we so very much apologize that we're rushing through the sessions as we're trying to make up for lost time. Well, I do have confirmed news that one of you right here in this room will be the lucky person to win a ticket, a free ticket from Saudi Airways. And in a short while from now, we will have the lucky draw. So we're looking forward to every single one of you being here in this room once we're done with all our sessions. Of course, the lucky draw will be conducted by Saudi Airways. And we have amongst us here the Director of Indian Subcontinent, Mr. Keku Gazdar. So he will join us in a short while to have the lucky draw and reward one of you with that free ticket. Well, we now proceed with our next presentation and a final presentation, after which, of course, we will have the panel discussion where we're looking forward to your active participation, and this will be conducted by Mr. Ronald Vale. So, well, ladies and gentlemen, the final presentation for now is on the Frankfurt Airport, linking the India-Europe air cargo. And we have amongst us here the Senior Vice President, Frankfurt Airport, Mr. Dirk Schuziara. And I request him to kindly join us. Let's give him a round of applause, please.
So good afternoon, ladies and gentlemen, distinguished guests. My name is Dirk Schuziara and I'm responsible for cargo development and management of Frankfurt Airport. It is my great pleasure today that we are here together and that we could organize together with FIO and also with Strat Media Times this Airshippers Forum, because we believe that the exchange of views of each partner in the process chain is very important to develop our industry further. And I would like to take you shortly to Frankfurt Airport. So Frankfurt Airport is the biggest air cargo hub in Europe. Last year we handled 2.1 million tons of cargo, and about 80% of this is general cargo. 20%, thank you. 20% is special cargo, and we have all facilities available for perishables. We discussed pharma yesterday, also we have an animal station, etc. So we are prepared for all kinds of cargo. Worldwide, we rank on number 9. Why are we such strong? On the one hand side, Germany is a very important export nation, but also the Rhine-Main region in which we are located is the economic powerhouse. We have one of the highest GDP products in Germany. We are also the home of 2 central banks. We are the home of the European Central Bank and the Federal Bank of Germany, and we have all major companies located around our region, for example, pharma and biotech, automotive companies, and also IT and telecommunications. Of course, also as an international airport, Frankfurt is located perfectly into the world. In total, we serve almost 300 destinations non-stop in almost 100 countries. And we also have all major freighters using our airport. About 60% of our cargo is handled by freighters and 40% in the belly of passenger aircraft. Also to India, of course, we are perfectly located. On passenger aircraft, we have 39 frequencies per week, which we service in between Frankfurt and India. And also on freighters, we have scheduled 15 freighters weekly in between India and Frankfurt Airport. Also very important is the development of our cargo city, because we have 2 cargo cities, one in the north, one in the south. This is a total of 150 hectares where we have about 250 companies out of the forwarding industry and the logistics sector located, and we work closely together. We founded last year our air cargo committee at Frankfurt. And in this committee, we work together on process improvements, on marketing together, and this is where we think it's very, very important to have the collaboration in between the parties to work further and to move our industry forward. At the end, beside all these figures, it's very great to have you here, and thank you very much, and I wish you very nice discussions.
Thank you very much, sir, for that very illustrative presentation.